away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Akil. Here are the headlines. Asian markets have opened with modest losses after an uncertain day of trade on Wall Street and mixed cues from trade talks. Sources tell Bloomberg that China may buy an additional $30 billion worth of agricultural produce as part of the trade deal between the two countries. Lower than expected headline inflation and signs of growth of slowing prompted 4 members of the Monetary Policy Committee to cut interest rates, according to minutes of the February policy. ING is looking to sell part of its stake in Kotak Mahindra Bank worth 2,800 crores. 2 bankers in the know told Bloomberg Quint. An employees' provident fund organization has hiked interest rates by 10 basis points to 8.65%. The move will benefit 6 crore subscribers. Now, healthcare and energy companies led U.S. stocks lower on Thursday, ending a 3-day winning streak for the S&P 500 and giving the benchmark index only its 4th loss this month. The modest sell-off came as investors weighed mixed economic data. Bloomberg's Abigail Doolittle wraps up the complete Wall Street action in this report.
Stocks finished lower in Thursday's Wall Street session, snapping a multi-day winning streak, especially for that tech-heavy NASDAQ. At the end of the day, the Dow, the S&P 500, the NASDAQ, all down about 0.4%. So not a huge decline, but again, a little bit of a snapping of a trend, an uptrend in the near term for the major averages. Some saying it has to do with trade, wanting more information about a deal between the U.S. and China. There was some weak economic data out of the U.S. this morning, but also worth considering the idea that those FOMC minutes were a little bit less dovish than some investors had hoped, considering that Haven bonds sold off with stock selling off. That tells you yields were rising. So perhaps we're going to see some sort of a small stall or reversal for the risk rally that's happened this year, largely on the expectation that yields would stay put or even go lower. As for stock movers on the day, there were lots of them, mostly to the downside. We had 7 of the 11 S&P 500 sectors lower, led by energy up top, some of those defensive sectors such as utilities, consumer staples, and real estate. Tech ever so slightly higher, but there were some big laggards in that space that we'll be talking about, including Alphabet and Facebook, both of those shares down more than 1.5%, really not on a particular reason. Investors taking profits. Same deal for Apple, down less than 1%, but profit taking there for certain. ExxonMobil, a big decliner, really dragging also on that energy sector. Tesla down 3.7%, this putting the stock at its lowest level in a month. They lost their Consumer Reports recommendation on that Model 3, the more affordable vehicle. Higher, though, helping Microsoft up 2.1%. Not enough to balance out the S&P 500 to the upside, but still a nice day, as Morgan Stanley says that those shares have the best risk to reward within the software sector. But overall, Thursday's Wall Street session, despite Haven bonds pulling back, stocks were lower too. There was a bit of a risk-off tone. In New York, Abigail Doolittle, Bloomberg News.
Moving on, let's take a look at the Asian markets. And as usual, we have Rosalind Chin of Bloomberg News joining us live from the Hong Kong studio. Rosalind, good morning.
Good morning. Not a great morning so far for Asian stocks. We see here that the MSCI Asia Pacific is down about 1/3 of 1%. The Nikkei and the Topix and the Kospi are all losing at this hour. The Hang Seng Shanghai Composite also opened up not that long ago, and it looks like the Hang Seng is trading 0.4% lower. Shanghai Composite just about flat, but also edging into negative territory. Now let's take a look at the different regions. We did have, the Nikkei and the Topix snapping now, 4 days of gain. So this is the first, looks like the first, heading towards the first day of declines so far this week. We saw a tiny increase in CPI for Japan, but probably nothing that's really going to shake things up that much. Korea, we saw data showing that exports fell 12% in the first 20 days of February. That's not helping, of course, the Kospi make any positive moves today. In China, we've just in the last few minutes had some new data on home prices. So China home prices rising 0.61%. That is against expectations. Sorry, that is against December's growth, and that shows slower growth than December. So another unit, as it were, another thing to add to the concept that China's economy is slowing. We've got Australia, the ASX 200, that is actually making gains of 0.5%. Aussie dollar, now that had a bit of a rock and roll Thursday, you could say, as it reacted to various reports. And now, right now, it is at, I'm just going to check it for you, at 70 cents, 0.7089 US dollars to the Aussie dollar. It's making a little bit of a recovery, recovering some of those losses after a Reuters report had said that Australian coal was banned from one of the major Chinese ports. The Australian government has come out downplaying that, so a little bit of a recovery there for the Aussie dollar. MLive, our Bloomberg blog, points out that actually China can't get by for too long without Australian coal because it is a kind of specific kind of coal. It's the world's biggest exporter of this kind of coal, and it's a key supplier of this high energy value coal that China needs to reduce pollution and also boost efficiency. And a quick look at oil here since we're at it. WTI crude at 56.87 a barrel, and that's after a report showing American crude stockpiles continue to swell. Back to you.
Rosalind, thank you so much for getting us those updates from Asia. But on to updates from trade negotiations between US and China. Sources tell Bloomberg that China has offered to buy agricultural products from the US worth an additional $30 billion. Products include wheat, soy, among other products. Tom McKenzie of Bloomberg News brings us his update.
What we're hearing from sources is that the Chinese proposal is to buy an additional $30 billion worth of US agricultural products on top of pre-trade war levels. So you're talking soybeans, corn and wheat. Apparently the Chinese are also looking at potentially reducing some duties they'd put on distillers' grain in light of these trade tensions as well. And we've seen already soybean imports into China from the US tick up following some of the previous rounds of discussions between the two sides. But you're right, it does remind us, of course, that one of the key aims of the US negotiators was to reduce its deficit with China, $375 billion approximate trade deficit with China. That has been at the forefront of the Trump administration's aims as part of these talks. But it's also been one area where many China watchers have said it would be relatively easy for Beijing to respond to. So now we're listening and hearing about this $30 billion number.
Yeah, that's all good, right? But what about the structural reforms that Washington wants out of Beijing, including those on IP theft, forced technology transfers, and state subsidies?
Well, yeah, absolutely. The more difficult stuff in terms of the negotiations. So we're hearing that in terms of what the plan is for the end of this week, they want to get about 5 MOUs signed, or at least agreed to, or movement on those areas. And they will include areas like intellectual property, forced tech transfer, the services part of the economy as well, the services sector, as well as agriculture, and well as non-tariff barriers. But in terms of the deep structural reforms around things like state subsidies for various industries, that apparently is off the table for now, at least. We know that Vice Premier Liu He, China's lead negotiator, is likely to meet with President Trump at some point on Friday, again suggesting that momentum is moving in the right direction. And we're also listening, of course, to hear whether or not the US administration will agree to extend the tariff deadline beyond March 1st.
Let's take a look at our own markets then. At this point in time, we're seeing the SGX Nifty while moving down in tandem with Asian peers. Well, just a 15-point cut. It's not significant. But when it comes to markets yesterday, again, we did see some strength come through for the Nifty, up as much as 0.5%. And it was the same with the broader market indices moving and actually outperforming the benchmarks. The Nifty banking indices also moved up higher. But moving on to your ADRs, at this point in time, seeing some gains coming through for ICICI Bank. Not too much to speak for otherwise when it comes to Vedanta or Wipro, Dr. Reddy's, and as well as some losses for Infosys as far as the day's trade is concerned. FIs, well, there was actually very little traction and from the FI front, and DIIs too, just spot up as much as 202 odd crores. This is despite the fact that it was a weekly expiry. But in terms of contributors, once again, it's Reliance Industries, ICICI Bank, and the HDFC Twins which stand out, providing that little bit of growth as far as the Nifty is concerned. But moving on to your futures and options space, what we're looking at is a decline of 2.5% in open interest, so unwinding coming through with a little bit of short covering, if I can call it that. And the Nifty banking futures continues to see unwinding of positions here as well. So the shorts that were made around last week are now being unwound in the Nifty banking futures. We're looking at about a 300-point range at this point in time, with 10,700 on the lower end and 11,000 on the upper end as we move into expiry week next week. But in terms of changes in OI, 10,700 put is the one which stands out. But moving on to your VIX, it came off, cooled off quite substantially, now below the mark of 16.5. This should soothe the nerves of traders. And the Nifty put call ratio edging even higher to around 1.38. It's the same for the Nifty banking put call ratio at 1.2. And moving on to your stocks. A whole host of stocks actually. We now have 10 stocks in the F&O band. It's a very interesting series. A whole host of ADAG stocks there, but these two are new in the. So that's the PC Jewel and Infra. But in terms of new entrants, we have Adani Power, which has actually entered the F&O band, among many others. So we'll be watching out for that. Of course, the Kotak Mahindra advanced in trade on the back of buyback. The buyback has come through. Fresh longs there, and Just Dial is also looking at a surge, a little bit of a spurt, if I can call it that, up 9%. Moving on to those which are unwinding, we see Oil India, Britannia standing out in trade. Britannia, actually seeing short covering despite some amount of noise building up, suggesting that technically it may be overbought. But that's a wait and watch. At this point in time, we're going to have to see how these stocks react in trade. But ING Group plans to sell more stake in Kotak Mahindra Bank today. Remember, ING has been one of the largest public shareholders in Kotak after the private lender acquired ING YSA Bank, and it has been cutting down its stake at regular intervals. Yatin Mota has an exclusive here.
Well, ING Group is all set to sell its 1.21% stake in Kotak Mahindra Bank via block deal. Of course, the transaction is most likely to happen at a discount to the closing price of Thursday. Now, the sources which have told Bloomberg Quint about the development do indicate that the total block size could be upwards of 2,800 crores, as ING plans to sell nearly 2.3 crore shares. And depending on the response, from institutional investors, ING also plans to up, the deal size if required. So as of now, what we are gathering is the block deal is likely to happen today. And more importantly, this 1.21% stake which ING is planning to sell is a part of the 3% odd holding that ING has, which is as of December. So, post this deal also, there could be multiple transactions that the ING Group can do moving forward, since they have been selling their stake post, their India arm, which was ING YSA Bank's merger with Kotak Bank. So, it will be an important, transaction to watch out for, since the base price is at a 5% discount to the closing price of Thursday. And more importantly, RBI has also directed the promoters to pair their stake moving ahead. So it will be an interesting point as to how really does the institutional response come in as far as this block deal is concerned in Kotak Bank by ING Group.
The February meeting of the Monetary Policy Committee was an important one, since it represented a pivot away from a calibrated tightening stance to a neutral stance, and that neutral stance came together with a 25 basis point rate cut. So naturally, there is a lot of interest on what each individual committee member thought the rationale behind either a status quo or a rate cut was. Remember, it was a 4-2 vote in favor of a rate cut. This is what we picked up from the minutes which came out on Thursday. We've had an unlikely change of governor between the MPC terms. So there has been a difference in stance between Urjit Patel, the governor, and Shaktikanta Das, the governor. Urjit Patel in the December meeting had noticed softer than expected inflation, but he had also highlighted that core inflation remains high. Taking both those into account, he had said that if inflation risks do not materialize on a durable basis, space for policy action may open up in due course. At no point did he suggest in the December meeting that a rate cut and a change in stance would come as soon as the February meeting. Shaktikanta Das, who's taken the chair from him, has taken a different stance, not to say that he hasn't noted the elevated core inflation, but he's focused on the legal mandate of targeting headline inflation, which into Q3 of next year is expected to be below the 4% midpoint of the MPC's target. Taking that into account, he said that the time is opportune to seize the initiative and create a quote-unquote congenial environment for growth to revive and to ensure this in a sustained manner. So his focus clearly on growth, given that the inflation objective has been met, and he said as much. Deputy Governor Viral Acharya voted against a rate cut, although he voted for a change in stance, and his thinking has been consistent. You have to give him that. In December, he talked about the fact that the recent downward surprises to inflation had significantly reduced the need for policy tightening, but they did not eliminate the requirement altogether. Now, based on the inflation prints that he got since then and the information he would have picked out from the RBI's research department, he said that the MPC's mandate to target headline inflation at 4% is on a durable basis while paying attention to growth. And given the information that he has at his disposal, he prefers to take off the helmet but stay within the crease, using cricket terminology there to explain his vote for a change in stance but a vote for a status quo on rates. Now, the big shift on the MPC came in from Michael Patra, who was actually considered to be the most hawkish member of the MPC. His hawkishness depicted in some of his comments in the December policy, where he, for instance, said that although softer inflation prints could likely lull inflation expectations, abundant caution and decisiveness in quelling risk to the target are warranted. And, if you go back into a few MPCs before that, it was a similar kind of hawkishness that Michael Patra had maintained. This time around, he chose to focus on the headline. He chose to say that under the inflation targeting framework, the intermediate target is the forecast, and that forecast is below 4%, so it gives them some room. And then he went on to say, slightly inexplicable sort of comment, saying that it's prudent to preserve sufficient policy space to insulate the economy from adverse external shocks and to boost domestic economy in an opportune manner rather than deplete it in haste. I have no idea what he means by deplete it in haste. If you had maintained a 6.5% policy rate, would that have meant that the economy would have, sort of taken another knock? I don't know. But these are the words that he has chosen to use. We are perhaps slightly facetiously calling it the taming of the hawk. But moving on to other committee members, Ravindra Dholakia, of course, has been the most dovish member of the MPC, and he maintained that stance. He'd argued in the December meeting that real rates in the economy are too high. He made that same argument right now and said that there is room to bring down real interest rates. He also argued that real interest rates have a bearing on real GDP growth, and that should not be ignored. Among the non-RBI members on the MPC is also Chetan Ghate. Chetan Ghate was the only person who had voted along with Viral Acharya for a status quo on rates. And again, Chetan Ghate has maintained fairly consistent thinking, where he has focused on the elevated level of ex-food, ex-fuel inflation, that's core inflation. He said that this time around as well, and he said that maintaining status quo on rates would be consistent with sustainable growth in the economy and achieving the inflation target over the medium term. He also flagged off fiscal risks coming in from off-budget spending, which he says is something that you need to watch out for. Pami Dua, the last member on the committee, has always been a very data-driven person, so perhaps you could forgive her a little bit more for changing stance abruptly, if you want to call it that. Until December, she was still talking about the upside risk to inflation and said it was best to pause and wait for incoming data. This time around, the data focus has been more on the growth numbers, not just domestic, but global growth numbers and indicators by ECRI, which suggest that there could be downside to growth coming in. In light of the benign inflation outlook and the moderating inflation expectations, as well as the likely headwinds from global growth, Pami Dua said that she votes in favor of a policy repo rate. Those are the individual members. The bigger takeaway is that growth certainly has, once again, gotten primacy in the MPC's language, thinking, whether it's some of the domestic growth concerns that we have seen with softer than expected GDP prints, or it's the global growth concerns that are emerging. It does look like it is now growth until we see some risk to inflation actually show up in the data, upside risk to inflation show up in the data. It does look like growth will maintain its primacy.
the EPFO has finalized its interest rate for financial year 2018 and 19 to 8.65%, which is an increase of 10 basis points from the previous financial year. The move will benefit about 6 crore EPF subscribers, and the decision on the same was taken in a meeting of Central Board of Trustees of EPFO, which is headed by or chaired by Union Labour Minister Mr. Santosh Gangwar. The proposal will now have to go to the Finance Ministry for its final approval. The increase in interest rate will leave the fund with a surplus of 151 crore rupees as against an excess or surplus of 586 crore rupees the previous year. Remember, EPFO had a total corpus of 13.33 lakh crore rupees as on March 31st, 2018.
Let's look at the important stocks for today. Bharat Electronics signs teaming agreement with Hughes India to provide satellite communication solutions for helicopters. AU Small Finance Bank enters into agreement with ACKO General Insurance to act as a corporate agent for insurance products. Then we have Fidelity Funds acquired 2.8 lakh shares, which is 1.33% of Hinduja Global Solutions at rupees 591 each in block deal. Kaveri Seeds clarifies that Andhra Pradesh government suspends license on January 28th. It says suspension will have no impact on the budgeted sales of the company. License suspensions made by local authorities is of routine in nature, and no significant bearing on the operations is expected on the company. Now let's look at what promoters are buying. GMR Infra promoters acquired 63.2 lakh shares from February 18th to 19th, and Spencer's retail promoter Rainbow Investments acquired 7 lakh shares on February 19th.
Planes to the right of us, planes to the left of us. No, it's not the modern version of the Charge of the Light Brigade. It's the Aero Show Bengaluru.
61 planes and helicopters, over 600 exhibitors, which include domestic and foreign, are participating in this Aero Show. It's a jam-packed session with all sizes and shapes of jets and helicopters on display.
But let's get to the one jet that's the center of all the attention. The Rafale jet. Unfortunately, due to all the political storm it has created. Now, Dassault has flown these fighter jets, and one has to say, these metal birds surely look like a mean machine.
And giving company to Rafale is Saab's Gripen E. Saab is planning to bring this aircraft to India as part of the strategic partnership program. Saab is also willing to do a transfer of technology and also set up the entire infrastructure in India if it backs the $20 billion order.
We are going into a deal of a magnitude like Gripen or submarines. We are also offering a full technology of transfer. We will build up an indigenous capability in India with design, development, and of course production capabilities, because partly 96 out of the 114 aircrafts are supposed to be built in India. So that we will of course generate.
Now, Airbus is yet to open its account with respect to defense projects in India. It is optimistic that it will give back the helicopters order, in which it is associating itself with Mahindras to produce the helicopters in India. The other one where Airbus is very optimistic is the Aero replacement program, where Airbus has pitched its C295 to replace Aero. This is 50-odd aircrafts which will be built in India in association with the Tata Group. I took a sortie on this C295 to get an experience of what this transport aircraft is all about. Now, Airbus has been on the receiving end for the last couple of years, primarily because of the supply chain issues and its Pratt & Whitney engines. These engines led to delayed deliveries in India. Indigo, which is one of the largest customers for Airbus in India, had delayed deliveries, and that impacted its operations. But things are now changing for Airbus and for the Indian airliners. Airbus claims that it has been able to resolve all the Pratt & Whitney engine issues, and now the deliveries will be much faster as compared to what it did in 2018. In 2018, it sold nearly 67 aircraft to various Indian airliners. That would be exceeded. That's what the MD of Airbus India, Anand Stanley, told Bloomberg Quint.
In the last 12 months, we have been very focused on working with our engine partners, the airlines, the regulatory authorities, very actively. And we have incorporated aggressively a number of, I would say, software changes, a number of fixes, and also we've done a lot of, where required, a number of retrofits. What has led to is the Indian fleet has now been 95% retrofit, and in the next 2 months we will be 100%.
And giving competition to Airbus 330neo is Boeing 787 Dreamliner. Now Dinesh Keskar, Senior Vice President, Sales, Asia Pacific and India, in a conversation told me that the only way that gives edge to Airbus 330neo is the pricing, as 787 Dreamliner is not the most advanced, it flies faster, its maintenance cost is 30% lower, and also its fuel consumption is 15% less.
Now with the A380 announcement that they will not be building that anymore after 2021, this airplane behind us becomes the largest airplane, but only with 2 engines, which gives amazing economics to the airlines and amazing, basically, ride to the passengers inside and ability to have amenities.
Now, there's lots to talk about through the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. In a meeting held at the RBI headquarters on Thursday, Governor Shaktikanta Das appealed to banks to pass on lower interest rates to consumers, but bankers were reluctant to make such a move. Bankers told the central bank chief that deposit rates are already low. It would be difficult for them to lower rates further. And ratings agencies Moody's believes that complete turnaround of India's PSU banks is still a long way, despite a 48,000 crore infusion by the bank, or rather the government. Now, Moody's believes that although this will improve the core capital of these banks, the large volume of NPAs will continue to cloud their profitability going forward. And that's a wrap on this edition of All You Need to Know. Stay tuned to Bloomberg Quint for more news and updates.